Assalamu alaikum everybody. Welcome back to my channel Rapid Revision. Today's question is pretty interesting because there's something very different about this question is that we need to prepare a drawings account in one of the parts of this particular question. This is from 7110 and 7110 was obviously you guys know also that before 2020 the O-level course code for accounting was 7110. That was basically principles of accounts. Okay, this is paper 2 variant 3 of May-June 2018. In the first part, they are basically testing you guys on ledgers, books of prime entries, and business documents. And this particular, they have given you a ledger account, and they're saying here the following ledger account appeared in the books of Kusum on 31st March 2018. There's an account of Smith. Smith is basically has a balance brought down on the debit side, which means it's a customer account. So Smith is a credit customer because they have a balance brought down on the debit side. Trade receivables have a balance brought down on the debit side. And because obviously trade receivables are the assets of the business, so whatever assets a business has, the balance brought down for all assets comes on the debit side of the T account. And I know this, again, they have also made sales to Smith, and that is for $700. Smith has returned goods to Kusum, which is for $150, and there's an amount of money which Smith is paying to Kusum, and then there's a discount, then there's a balance carried down. So now they're saying name the subdivision of Kusum's ledger which would contain the account of Smith. So this will be sales ledger because in sales ledger we have T accounts for all credit customers. So each of the credit customers, their personal accounts are maintained in the sales ledger. The next part here says document that Kusum would issue to Smith on March 5th. So March 5th is basically when Kusum is making credit sales to Smith. So whenever sales are made on credit, the document that is issued is invoice. So Kusum will basically issue invoice on 5th March to Smith. Then they're saying document that Kusum would send to Smith on 14th March. So there's a refund which Kusum is giving to Smith of $60. So refund, whenever we are paying a refund to our customer, bank account is credited. So Kusum's bank account is credited. So that is why Smith's account needs to be debited by $60. And whenever you are going to, obviously, when you pay someone something, when you make a payment, right, to someone, you will obviously send a check to make this payment. So Kusum will send a check to Smith to make this payment. Then they're saying book of prime entry in which the transaction 7th March would be recorded. 7th March is when Smith is returning goods to Kusum. So this is sales returns. So on March 7th, this will be recorded in the sales returns journal. So I'm going to write here sales returns journal. Then they're saying type of discount given to Smith on 21st March 2000, whatever year this is. I don't know which year. It's 2018. Yes. So the type of discount that is also recorded, and you will see this discount in the T account. And whenever there is a discount which is not recorded, which is the trade discount, and then on March 21st, because Smith is paying Kusum at the time of payment, the discount that is given at the time of payment is a cash discount. So I'm going to write here cash discount. Then they are saying section in Kusum's statement of financial position that would contain the account of Smith. So there are 5 sections of the statement of financial position: non-current assets, current assets, capital section, then there is a non-current liabilities section, and then there's a current liabilities section. And trade receivables come in the current assets section of the statement of financial position because Smith again is a trade receivable, so his balance will be recorded in the current assets section of the statement of financial position. Then they're saying calculate the percentage discount taken by Smith on 21st March 2018. So here basically Smith is basically paying us 144 for an amount which was $150. I know this because $6 is the discount, and after discount what he's paying us is $144. So $144 plus $6 is basically the amount that he owed us. So this is the amount that he's trying to settle, right? So he's trying to settle $150 worth of amount, but he's paying $144 to us. and $6 is the discount that we are giving to Smith. So we are going to basically calculate the discount in such a way. $6 is the discount that we are giving Smith, and total is the $150 is the amount that Smith is trying to settle with a $6 discount. So $6 discount divided by $150, which is the amount he's trying to settle, multiplied by 100, will give us 4%. So basically, this is the percentage discount which we are trying to give to Smith. So $6 divided by $150 multiplied by 100%. Okay, the next part is basically interesting, because in part C we are going to prepare a drawings account, and this is something which is new, because if you guys have looked at the recent past papers, you guys will not see the drawings account in one of the recent past papers. But drawings account is also something which is obviously part of syllabus. So, and it is interesting because we also need to transfer drawings into capital. So they are saying here the following information is available for the month of April. They have given you $6,400 balance in the drawings account, and the capital account balance is 9,000. So drawings is always debited, so drawings will have a debit balance. Capital is always credited, so capital will have a credit balance. So we are going to record this as our balance. So I'm going to write here April 1, 2018 is the year, and then I'm going to write here balance brought down. Balance brought down in the drawings account will be $6,400, and in the capital account again I'm going to write here April 1. On top of it I'm going to write 2018 because that is the year. I'm going to write here balance brought down. Balance brought down for capital is 9,000. So this is basically my opening capital for the month of April. So opening capital account balance is 9,000. Then they are saying Kusum paid 2,500 into the business bank account from her personal bank account. So this is additional capital. So for double entry for additional capital is bank account is debited, capital account is credited. So because she's paying from her personal bank account, so this is like, and she's paying that into the business bank account, so that means the business bank account is receiving the money. So bank is going to be debited and capital is going to be credited. So in the bank account, in the details I will write capital, of course, but in the capital account, in the details I'm going to write here bank, and this is going to be 2,500, and there's no date for it, so I can use the last day. Oh no, there's a date. April 7 is the day. So I'm going to write here April 7 and bank, and then 2,500. Then they're saying Kusum cashed a check from the business bank account for 500 for her personal use. Again, she's basically taking out money for her personal use, so drawings account needs to be debited, business bank account will be credited. So in the bank, on the credit side, I'm going to write drawings in the detail. In the drawings account, on the debit side, I'm going to write here bank in the details, and I'm going to write here 500, which is my drawings, and I'm going to write here April 9. Then they're saying the annual insurance premium 750 was paid by check. This included 150 for the insurance of Kusum's home. So this is very interesting because the insurance of Kusum's home means that this is going to be drawings, right? Because we are not supposed to pay our personal expenses from the business bank account, and if we do that, so we need to treat it as drawings. So 150 is basically going to be transferred to the drawings account. So what they did was that they did insurance account debit 750 and bank account credit. This was the first double entry. So basically we paid insurance through the business bank account, and insurance account is debited, bank account is credited. In the second entry, we are basically going to remove the $150 from the insurance account, and we are going to debit the drawings account. So I'm going to write here drawings debit $150 and insurance account credit. I'm going to credit insurance here $150. So that means we'll basically remove 150 from insurance account and put that into the drawings account. So I'm going to write here April 15 on the debit side. Again, drawings is being debited. I'm going to write here insurance because this is coming from the insurance account. I'm going to write here $150. So this is what we have paid for. Kusum has paid for her own home. This is her personal expense, which she has paid through the business bank account, but then you need to transfer this amount to the drawings account because this should be treated as drawings. Then they are saying Kusum prepared the financial statements. The profit for the year was 3,700. that they have given you for the capital account. Then they're saying prepare the following accounts for the month of April 2018, complete the appropriate year-end transfer from the drawings account. So basically now this total drawings is going to be transferred into capital. So when you transfer drawings into capital, capital account is basically debited and drawings account needs to be credited. So we basically close the drawings account. There's no balance carried down anymore in the drawings account. I'm going to transfer this to capital. I'm going to write here details. In the details, I'm going to write here capital, and this is going to be 7050, and this is going to be April 30, 2018. This is how I'm transferring drawings to capital. The total of this account will be 7050 on both sides. And then I'm going to show this on the debit side of the capital account. I'm going to write here drawings, and I'm going to write here 7050, and this will again be April 30. So this basically this is coming from the drawings account. We are going to credit the drawings account and debit the capital account. Drawings basically decreases capital, that is why it is debited in the capital account, because drawings will decrease capital. The profit for the year needs to be transferred to the capital account. Profit always increases capital, and on the credit side of the capital account we record profit for the year. So I'm going to write here April 30, and I can write here income statement, or in some marking schemes I do see that they have also written profit for the year on the credit side of the capital account, but you write here income statement and you write here 3700. In one of the recent marking schemes as well, they have, that is February March 2024, in which we have a capital account which we need to prepare, and they have written income statement on the credit side of the capital account for basically transferring profit for the year to the capital account. Profit is going to increase capital, that is why I'm going to record this on the credit side of the capital account 3700. And now I'm going to calculate balance carried down. So when I calculate balance carried down, I'm basically going to add whatever I have on the credit side. 9000 plus 2500 plus 3700 minus 7050 will give me closing capital, which is 8150. This is my closing capital for April 30, 2018. And now this account is going to be balanced on both sides. The total on both sides will be 15,200, 15,200, and then balance carried down will become balance brought down. So after April we have May. So I'm going to write here May 1st, 2018, and this is going to be 8150. This was for 5 marks. The drawings account was for 5 marks. Now they are saying distinguish between bookkeeping and accounting. This is very interesting. Bookkeeping involves detailed recording of financial transactions. So a bookkeeper records transactions in the books of prime entry, and in the T accounts is also called ledger accounts, also extracts the trial balances. All of this is the bookkeeper's job. However, accounting involves the preparation of financial statements, also decision making, preparation of financial statements at regular intervals. Also there's decision making related to financial decisions that accountants need to make. So financial decisions like how to control the expenses of the business, or what should they do to increase the revenue of the business. So these are basically decisions which are taken by an accountant. However, accounting involves the preparation of financial statements at regular intervals, also decision making related to it. So thank you so much for watching. Hope this helps you guys. Thank you so much.